I always set these lives up, and as soon as I like hit live, I realize that I haven't done anything, and then I start scrambling to like plug in my phone so my battery doesn't die, and go to all the websites that I use for these videos so I can have everything open in my browser, and I'm always like last minute scrambling to get things done. I should just set up everything at first and then be ready to go. But I don't do that. I don't know why. Welcome to the Most Must See Live on All of Finance TikTok. My name is Kenneth. If you're new here, hit that screen as much as you feel like doing. It really helps to bring in more traffic. You can see there's 0 likes and 10 people. If you hit it a whole bunch, just for like the first few minutes of the live, you don't have to hit it for minutes at a time, but just hit the screen for a little bit. It helps bring in a ton of traffic early on in the live. You can't do it 20 minutes into the live. If you start hitting the screen a lot, it's not going to do anything. It's like really the way TikTok has set this thing up, and it makes the live more interesting. If there are way more people in the live, it makes it just more interesting. It makes it a faster. Hey Margot, good morning. Flagship Photos, good morning. It makes it a much more interesting live. So if you're new to investing, read this to the side so you can learn a little bit about me and who I am. My name is Kenneth. Get your investing questions ready. Markets are closed tomorrow, and I guess probably my assumption is that people are still going to want to talk about those Bitcoin ETFs. Let's see. iShares has one called the iShares Bitcoin Trust. It's down 6%. Hey, Deborah Jackson, good morning. Kindhearted is in here too. All my regulars. Oh my God, there's 451 people in the Most Must See Live on All of Finance TikTok. Hello, welcome, good morning. If you have any questions about the stock market, day trading, swing trading, investing, individual stocks, growth stocks, dividend stocks, ETFs, you're in the right place. 566 people in here this morning. Holy moly, good morning. This is the most people I've had on a live in a long time. Come prepared. MJ is in here. Hey, what's up, MJ? You have imposters. I know there are thousands of them. There are thousands of Trade, Invest, Simplify copycat accounts out there. You need to be careful. I make it a point to say I'll never follow you back so that you know when you see me following you, it's likely a scammer. Block them, report them. If they do not have 222,000 followers, that's how many I have, block them, report them. It's not me. I don't have a backup account. I have no secondary Trade, Invest, Simplify account. I'll never DM you. These guys, they'll say like, hey, how are your investments going? Sounds like something I might say, right? Then they try to sweet talk you into paying them or sending them money. People have written me and they've said like, hey, am I really talking to you right now? Those are the smart ones. Some people have written me and go, hey, ambitious, thanks for the heart. George Costanza quote in there with the MJ. And the worst ones I get are from the people who say, hey, did you get my money? Or they write me and they go, I changed my mind. Can I have my money back? And I'm like, what are you talking? The first time it happened, I was like, what are you talking about? Like, what's going on? And they were like, I sent you money to invest for me. And I was like, no, you didn't. I don't do that. What are you talking? It was like, I was so confused. Someone else DM'd me once and said, I don't think I can do your $10,000 challenge. And I was like, my $10,000 what? Like, I had to think, like, did I make a video like where I was going to challenge myself with 10,000? Like, I didn't know what she was talking about. And she said, maybe I could do 5,000. And I was like, what are you talking about? And she told me, and I was like, yikes. TSLY is fine as long as it's a very small part of your portfolio. Lately, I've seen the surge in people rushing out and buying every single covered call ETF. As the markets become less volatile, or we enter a recession, which is always a possibility, although I don't think it's going to happen anytime soon at least, the covered call ETFs will lose value. So TSLY stock price will go down, and their dividend will decrease as well because it's just cheaper to go out and buy Tesla stock. The reason these covered call ETFs do so well is during bull markets, the stock price is constantly going higher and higher and higher, which means that someone can come out theoretically and take your shares away from you. That's the risk of covered calls, which is why covered call ETFs don't always have like what we call asset appreciation. Like the stock doesn't go up as much as the stock price for Tesla. TSLY will never go up that much, which is why it needs to be a part of your portfolio. If you like Tesla, you need to also own Tesla stock so you can benefit from the rally, and TSLY so you can make your make your own dividend. If Tesla stock becomes less volatile, the premiums that they sell will become less volatile or less lucrative, and TSLY will drop, the dividends will drop, and then people will be screwed because there'll be bag holders in all these covered call ETFs. I imagine something similar will happen with Coney, which is the covered call ETF for Coinbase, which is now that these Bitcoin ETFs are out here, it might stabilize the volatility of cryptocurrency. I could be wrong. And then Coinbase volatility, I mean, look, like Coinbase since going public, the Coinbase options ETF, covered calls ETF, is up 8% since going public, but in the last 14 days of the new year, it's down 29%. Do you have favorite cooking companies? You mean like to invest in? I can't really think of anything. Williams-Sonoma, I guess. Let's see. Williams-Sonoma is WSM. The stock is up 279% in the last decade. Hey Ken, thoughts on VB, VBK, and VBR? Well, I don't know what they are. Vanguard small cap. VBK, Vanguard small cap growth, and VBR small cap index funds. Small cap value. Oh, okay. These are all, I mean, small cap ETFs will always underperform the overall markets. There's possibility there as a part of a diversified portfolio that they could have higher growth. The problem is with these small cap ETFs is that a lot of them invest they invest in every small cap company. So even if there are 3 or 10 or 20 small cap stocks that start to really have big growth, the funds will be dragged down with the overall performance. In other words, 838 companies in the one that's VBR, 838 investments. So even if 20 or 30 have really strong growth and really move, the fund will be pulled down by the other losers. It's still an okay idea for a diversified portfolio to have one small cap ETF in there just to switch things up and keep things fresh. I would look for the one that had the fewest amount of holdings, just because it increases the likelihood that the winners will lift the whole fund instead of like that with 838 companies. But I have something to show you. This is on my website. If you follow me, you know I have these templates. I could make so much money selling these templates, but I don't do it because my whole idea is to provide as much free value as I can. So my website is right there. I cannot put it in text in the I can't put it in text in the comments because TikTok blocks putting websites in the comments to cut down on spam. So you just got to go to my website. I have a free resource guide. The free resource guide has all the websites I use. So people go, well, where did you find that? How did you find that? All the websites are here. The next guide I have is a fundamental analysis template. It is totally clickable. So you click on the link right here and you'll be able to click and put in your own, you'll be able to put in your own data and input your own data. Or you could, I suppose, if you're old school, print it out and fill it out. And the last one that I have, and this might be interesting to MJ who asked about all the ETFs, is my which ETF is better template. Also, click on the link, you'll be able to click it, or you can print it out, I suppose, and input your own data from all these ETFs that you asked about and make your own decision based on the data that you've done the research on. So these ETFs, these templates are all available on my website, which is right there, kennethsuna.com. Go download them. They're really, really helpful. How do I flip back to me? Hello, there I am. Hey man, British stock for you to consider Rolls-Royce. Rolls-Royce has never been a company that does well. I think it's like a penny stock, right? RYCEY. It's $3.85, which is so odd to me because Rolls-Royce is like this luxury brand. Wow, 500 people in here again. I hope you all saw the template on my websites. That would be tremendously helpful to new investors. It's kennethsuna.com, and you can input your own data and make your own decisions based on your own research. Rolls-Royce is interesting to me. It's got a lot of strong buys. Their grades are incredible, B minus valuation, A plus for growth, A plus for profitability, A plus for momentum, B for revisions. It's got a ton of strong buys. RYCEY, that's Rolls-Royce. There are no analyst price targets, probably because it's an overseas company. Where do I go? Here it is. In the last 12 months, Rolls-Royce stock is up 208%, which is insane to me. In the last 10 years, it's down 81%, so ouch. How much money do you make from TikTok? I make about $3 a day from people watching my videos, so not very much. They build a nice jet engine. Interesting. Thought about Maps. That's the cannabis one, right? The cannabis app where you can like see where stuff is. Penny stock, I wouldn't put in more than I was willing to lose. What app would you use to make small investments to buy stocks and funds? I'm new. I always recommend getting a high quality brokerage. One with tech support where you can reach out to them and speak to an advisor. They won't charge you, but you can just call and say, hey, I have a quick question about my Roth IRA, or I have a question about this, and they'll help you for free. That's usually on the higher quality brokerages. Stuff like Robinhood, they don't have tech support. You can't call someone and say, I have a question about a stock. Maybe they do now, I would imagine, maybe, but you might have to pay a privilege to that. Brokerages like TD Ameritrade, which has now moved to Schwab, Fidelity, really high quality stuff. I would just go to the big ones and the best ones now. I know a lot of people go like, oh, it's easier on the apps, it's quicker on the apps. Long term, you're going to be glad that you have all the tools and resources by having an established brokerage behind you. They offer a lot of free education, a lot of free information, a lot of analyst reports, charts, analysis, which some apps offer now, but they don't offer a tech support. They don't offer an advisor you can talk to. Good morning, Pizza Hoboken. Thoughts on United Healthcare after the earnings beat? It went down 3.3%. Not bad. We are never going to have universal healthcare in this country, ever. I don't think it's ever going to happen where we're going to have an affordable or free healthcare. It's always going to be for profit. If you can't beat them, join them. Might be one approach. United Healthcare in the last 10 years is up 619%. I pay, as a self-employed content creator, stock trader, whatever, I pay $470 a month for my health insurance through Care First. $470 a month. That's insane. For someone who is in very good health, I eat mostly healthy, except for the Costco hot dog I had yesterday. We go to the gym, we go on walks, we're very, very healthy. $470 a month is insane. But that's how these companies work, right? It's profits over people every single time. You can see it. They have these massive quarters of growth. They have 10-year growth up 619%. So some people hate them. I hate them. But at the same time, 619% growth, with a dividend of 1.4% too, is a little bonus. 14 years of dividend growth. They've grown their dividend by 16% in the last 5 years. Some people might say, if you can't beat them, join them. I do not think Meta would grow anymore. Well, you would be wrong. Meta, let's see here, in the last 12 months is up 173%. That is massive growth. They own Facebook, obviously. They own Instagram. They own WhatsApp. What else does Meta own? The Oculus, the Quest 3. It says here that they own 91 companies. I've never even heard of some of these. They own a company called Sofa, MailRank, Lightbox.com, Karma. They own a lot. I'm going to turn off my little space heater. It got too warm in here. Gilead Sciences is a popular one. Let's see, the 1 year price target on that. Let me open up everything here. Gilead Sciences for bet on yourself. Gilead Sciences is $86 a share. Their 1 year price target is 90, so it's not much upside. There are 19 analysts covering the stock. Of those 19, 0 have a sell, 9 have a hold, 10 have a buy. Gilead Sciences in the last 1 year, in the last 12 months, is up 0.77%, not even 1%. In the last 5 years, it's up 28%. In the last 10 years, it's only up 10%. So Gilead Sciences isn't a humongous growth stock at all. What you're getting from Gilead is a 3.47% dividend, which is pretty good. Dividend safety grade of B-. Do you have any favorite? Okay, we all caught up. Now I'm going to go to the bottom and work my way back up. Yes, 91 companies probably bought out for tech and to get rid of competition. I agree. Following just because you're not selling a course. Oski, thank you so much. I have built my account on the promise that I will never sell a course. I was doing paid subscriptions because people were asking for it. I'm trying to turn it off. TikTok will not let me. I have messaged them no less than 15 times saying I don't want to do the subscriber live anymore. It's just not something that I feel is necessary for me to do. And I can't turn it off. So if you subscribe to me, don't do it anymore. I can't turn it off. I'm trying to. TikTok won't let me. It says Care First is non-profit. I don't believe that. Care First? Oh, I don't know. I don't know about Care First, but United is terrible. Female, 60 years old. I pay over $1,200 a month. My mom had a friend who's over 60, and she was paying $1,200 a month too. And in order to pay less, she had been retired. She decided to go back to the workforce, not because she needed the money and not because she was, bored. She wanted the healthcare, so she went and got like a very easy job that she could do just for free healthcare. I mean, what a joke, right? It's unbelievable. Profile Platoon says I didn't have health insurance for 20 years. Some people want to take that risk. But about 12 years ago, I was in the gym. I was warming up that was my chair that cracked. I was warming up with the bar. If you know anything, a bar weighs 35 pounds. It's not heavy. I was warming up with the bar. I put on a little bit more weight on top of that, 135, not very much, tore my pec. Freak accident. I went to the hospital. They did the scans. They were like, "What? How much were you benching? I mean, you must have been benching like 500 pounds or something to have a pec tear like this." And I said, "No, it was my warm up." And they were like, "That's a freak accident. $60,000 was the cost of the surgery to repair the pec." So then you're happy you have that insurance. $60,000 would have destroyed me back then. Then you're glad. I have friends who are in their 30s and have cancer. And they say, "What? I'm healthy. What happened?" So, you didn't have health insurance for 20 years, and you're very fortunate that nothing happened to you. Something could have happened to you outside of you. You could have been hit by a car. You could have slipped on the ice. You could have 1,000 things. So that's why you have it. But it should not be $400 a month. That's criminal. Costco is exploding. Jonathan Judas is in here. Costco is exploding. Listen, they just did it's not a one time because they do it. They've done it in the past. But Costco does these special dividends when they have like a blowout quarter, and they had a blowout quarter. Costco issued not a one time. I should stop saying one time, but they issued a special dividend, and their special dividend was for $15 per share that you own. So if you had one share of Costco, you got $15. If you had 100 shares, you got like what? I don't know, $1,500. So it's a nice little special incentive to being a shareholder in these companies. The problem is to have 100 shares of Costco, you need to have a $68,000 investment, which is great if you can afford it, but most people can't. Also, Jonathan, I'm glad you mentioned Costco because it's a company people ask me about a lot because I go to Costco a lot. In fact, we just went yesterday and spent $374, and our refrigerators and freezers are packed full. We've got enough chicken thighs, ground beef, steaks, salmon. What else did we buy? Like those chicken strips for easy dinners. We bought so much, and it was $374, and that food will last us probably a little bit over a month. So pretty great deal if you can afford to buy in bulk, which is something my girlfriend was saying to me when we were in the store. Like, isn't it nice that we can buy in bulk and save so much? You know, if we went to the Giant and got a pack of chicken thighs, it would be $12 for one pack. Or we could go to Costco and get 6 packs for $30. Like, that's great if you can afford it. But you go to Costco, you load up. I mean, I'm sure some people just go and get like 1 pack of chicken thighs. But if you have a family or whatever and it's hard and you're paycheck to paycheck, it's a little hard to go and buy in bulk and spend $500 at the grocery store to give you months and months of food that you could freeze. That's hard to do. So if you're less fortunate, you end up paying more to go to, regular grocery stores. Anyway, the question was, someone asked me, do you own Costco stock because you talk about it so much? No, because in my opinion, at $683 a share, how many shares would I realistically buy? 10, 10 shares on a stock that maybe could go up 15%, 20% in what sort of time frame? A year, 2 years? I don't know. Their 1 year price target is, let's see. Costco is currently $683, and their 1 year price target, $683, is $755. That's a 10% move. So on a $6,800 investment to make 10%, wouldn't I rather just buy a dividend ETF or a growth stock that's much more affordable? For me, the answer would be yes. The fees can be a lot. I'm sorry, I don't know what that was in relation to. Hello, fellow investors, John and Judas. Wayne Easton, Tesla going up or down. Prediction? I don't make predictions. There's no point in making predictions. If I say I think it goes up and then a year from now it's down, you're going to go, that guy's an idiot. If I say it's going to be down and it goes up, that guy's an idiot. If I say it's going to go up and it goes up, then I'm a genius, and there's just too many unknowns to predict, probably up, right? But I don't know. You don't know. They have a lot of competition now. Every car is electric. Every company has electric vehicles. That's going to eat into Tesla. There are competitors that are coming out with way more affordable options than Tesla. Tesla stock recently, let's see. In the last 6 months, it's down 20%, which is why something like TSLY is getting hammered right now. The dividends on TSLY aren't what they used to be. If you put in money in TSLY 6 months ago, you're probably losing money. TSLY is the Tesla covered call ETF. It's down 40% TSLY in the last 6 months. So I think Tesla long term will be fine. Short term, I don't make predictions. Your guess is as good as mine. Even the analysts are split. Here's what it is for Tesla. It's currently 218. Their 1 year price target is 250. There are 30 analysts covering it. 5 give it a sell with a price target of $85. 13 give it a hold, and 12 give it a buy recommendation. So 13 holds, 12 buys. They're kind of split. 5 people say sell it. It has an overall rating of hold with a price target of $249 on average. The higher price target is $380. The lowest is $85. How much will election season affect the markets this year and possibly the next 5 years? Listen, at the end of the day, Wall Street, I don't think cares who's in the White House, as long as they have 2 terms. Wall Street doesn't like unpredictability. They don't like one-term presidents because it creates all this extra volatility. They want to know that the guy's going to get elected, he's going to do the policies that they say they're going to do or not, because most of them say what they're going to do and then they never do it. Not usually because they can't, but because the opposite party votes against everything and we're always stuck in this deadlock. But they like consistency, right? So they like eight years from one president because they know exactly he's going to keep doing the same thing that they said they were going to do. When you have a one-term president, it creates volatility in the markets. It creates all these unknowns because what if this guy loses and the new guy comes in and he then does his own, he changes things dramatically. So Wall Street doesn't like that. So I would assume that they want things to stay as they are, even though maybe they don't like Joe Biden. it creates consistency, and Trump getting reelected creates all kinds of uncertainty in the markets, and in the world, frankly. So, and election years usually are whatever. Let's see, how does the stock market perform in an election year? Let's see what the analytics say. Oh my God, why do they make these articles so long? Oh my God. I mean, this thing is like, I just want like a quick little answer. The stock market usually has lower returns in the year before an election. This is because investors are usually concerned about uncertainty. However, the market performance usually improves in the first 12 months after an election, regardless of who is in office. But I will say that I think things will change dramatically with the markets and certain investments depending on who gets elected. So if Joe Biden gets reelected, he'll probably continue his green energy initiative, put chargers on the road, more electric vehicles. I think Trump probably won't do that. So if you're heavily invested in ChargePoint and Blink and EVgo and Tesla and Rivian and Fisker and Lucid and lots of other electric vehicle companies and electrical adjacent, like charging stations, and Trump gets reelected, those are probably going to get hammered pretty hard. If Biden gets elected again, maybe the infrastructure will continue. So all of the agriculture and all of the spending on, farm equipment and construction equipment will probably do well. Caterpillar was up almost 14% last year, which is very good for Caterpillar. Caterpillar isn't like a humongous growth company. They're up 217% in the last decade. Compare that to something like Nvidia or Apple or Amazon. But to be up 14% in a year is pretty good, probably because of all the infrastructure. Wherever we go, there's construction. So, I don't know. That's a very long answer. Okay, to the bottom, and then we'll work my way back up. Senorita, how did you start? I started investing when I was a little kid. I was joking about this the other day in a live that it would have been a lot different if I had the internet as a little kid, because I probably would have had my own brokerage account, and I probably would have been able to say, hey mom, put my allowance in the account so I can invest. I would have probably been on an app like TikTok, and I would have been way more into investing as a result of the app. But my mom, when we were sitting at a McDonald's one day and I was going on about how much I loved McDonald's, and she was like, if you love it so much, why don't you own it? And I was like, I can own this. And she explained, Ninja, it says the link is unsafe. It's a TikTok thing. It's not unsafe. If it concerns you, which is fine, you can go on my Instagram and it'll take you right there. It's the same link. It's just something on TikTok. They say Linktree is always unsafe, probably because of people who have spicy accounts in their links and they want to, keep it PG. Anyway, so McDonald's was the first one. My mom, we went home, we called the stockbroker, I got McDonald's. And from that moment on, I started thinking about like all the companies I loved as a little kid. Like I would go to my mom and I'd be like, can I invest in this? Can I invest in that? And the next one for me was WWE, which is right here. As a lifelong pro wrestling fan, when WWF back then went public, I was like, I gotta own this. And it turned out to be one of my very best investments. People always go like, pro wrestling, really? But it outperformed Apple in the last decade. Will it continue to do that? Probably not. But WWE helped pay for my home. And so that's how I got started. And then I worked a bunch of minimum wage jobs. Nothing really panned out. I didn't know what I was going to do. I kind of got interested in stock trading, which is what I've done for the last 13 years for myself. And then I got on TikTok because I noticed people were getting scammed. Can I message you an election cycle I found interesting? Thank you. Yes, send it. BlackRock fired 300 ESG employees. It's a BS policy. Yes, I saw that. Tesla earning approach. What's your take on getting it right now at 200? It's fallen recently. Earnings is too volatile for me personally. I don't trade into options. I don't trade into earnings just because there's so many unknowns that can happen. The company can come out and say, we crushed it, but our guidance for next quarter is going to be bad. Well, then Wall Street goes, well, who cares what you did? It's what's going to happen next that we're worried about, stock dumps. Or they can say, we said we were going to sell this many cars and we sold exactly that amount. And Wall Street goes, well, that's disappointing. You didn't sell more? Stock could crash. Or they could say, we said we were going to sell this many cars and we came in just under. And Wall Street could think that's terrible news. That's awful. Stock crashes because if they sold a little bit fewer this quarter, next quarter could be worse. Could be, right? So there's so many unknowns with trading into an earnings report. You look at Tesla, it's already down in the last 6 months. The stock is down 20%. It's $218 per share right now. Their earnings could kill it. They could crush it, and the stock could go up dramatically. On the other hand, they could disappoint, and it could dump further. It could go into the 180s. Nobody knows. My approach, when there's something that I like and there is an unknown, like an earnings report, what I would personally do is I would buy a little now and wait. That way you have some skin in the game. If you want, let's say you wanted 10 shares. You buy 5 now, their earnings come out and it's terrible. The stock dumps. Well, now you have money sitting on the sideline and you can go and buy your next 5 shares. On the other hand, you buy all 10 right now and their earnings dump and the stock dumps because earnings are bad. You don't have any money left over to buy the dip. On the other hand, you buy 5 shares now and the stock skyrockets. Then you're going to be sitting there going, at least I have the 5 shares. At least I didn't wait. So that's what I personally do. Another option, by the way, is to buy the 5 now. If they have great earnings and the stock goes up a lot, you're going to be sitting there going, damn it, I should have bought the whole 10. You can wait. It'll probably come back down, profit taking. You might end up buying it a little bit higher, but who cares? Because you're not in Tesla for the next 2 weeks. You're in it for the next 20 years. Do your own fucking research says cars are a low margin business, so they can't make big profits. Buy AI or IT high margins. I waited so long for you to read my question and you skipped it. Oh no, let me scroll up. Do you ever buy Costco tires? I have in the past. Torn pecs surgery sucked. Yes, it sucked. Where's the question? This is for Harry. I don't see your question anywhere. It could have been that TikTok flagged it. If you want to repost it, I'll answer it right now. Where are you? Ask your question again. Do you have a day job? No, I'm a full-time stock trader and now a full-time content creator. I haven't had a day job in 13 years. Cigna. This is for, I think it was Kind-Hearted who asked. The symbol is CI. In the last 12 months, it's down 1.6%. In the last 5 years, it's up 58%, which for a healthcare services company is pretty good. In the last 10 years, it's up 240%, so it underperforms United Healthcare, but that could mean that they are that they could have more room to grow. Like United has already had the big growth. Maybe they're next up. Nobody knows. Cigna pays a dividend of 1.6%, which is fine. They have a dividend safety grade of A+. And they have a 1-year price target. Let me look here. Cigna, 1-year price target of $371, up 21%. Potential upside. Potential is the key word. Cigna has 0 sell orders, according to the analysts, 6 holds, and 8 buy recommendations. Do you take profits? Someone asked me why, their username why, do you take profits? Yes, sometimes I do. Let me scroll to the bottom because I want to find Harry's question if he's going to ask. User 346, are you a day trader? Yes. Day and swing trading. That's what I've done for the last 13 years to make my money. Do you own any Google? Yes. Jekyll says, thanks but no thanks. I don't know what that's in relation to. Christian says, I normally buy in March when stocks are cheap. I love Visa. J. Cal, another stock genius. No, I don't claim to be a genius. I'm anything but a genius. I'm just self-taught. But I'm sure you've already left, so you didn't even get to hear that. You know, these trolls, they'll come in, they'll troll you, and they'll leave, which I think is pretty cowardly. Visa, great one. Up 18% last year, up 92% in the last 5 years, up 355% in the last 10 years. They have a dividend, it is very little, it is under 1%, but they have a dividend safety grade of A+, probably because their dividend is so small. Visa. Hello, Visa, where are you? Visa is $264 right now. They have a 1-year price target of $285. That's around 7%. These credit cards are interesting. Like when the loans drop, people usually spend more, so it benefits them. When the the interest rates rise, it benefits Visa because people are paying higher rates. It's kind of hard for a company like this to lose when things happen in the economy, because people just put more on credit or they buy more stuff when things are good. So it's a win-win for them. It's a 305 price target is their highest price target. They have a strong buy rating with 19 analysts covering Visa, 0 sells, 2 holds, 17 buys. Chris says Tesla is on sale now, 20% off. I think I'm all caught up here. I don't see Harry's question. Jonathan Judah says he's a fan of John Deere over Caterpillar. John Deere is great. Thoughts on Neo? It's just too risky for me. As a small part of my portfolio, maybe I would put in what I was willing to lose. Sorry, my mustache is really itchy this morning. Neo is $7 a share. In the last 12 months, it's down almost 40%. Year to date, in the first 14 days of the new year, the stock is down 21%. Like, it's just too high risk for me. Master Investor says tech, 2 index, Apple and Microsoft. Chase says, do you coach one-on-one? No, I don't. I don't coach. Everything that I do is free. You can go on my YouTube channel. There is an Investing for Beginners playlist on there that covers everything you need to know if you're new. It works like a course, except that it's not for profit. I'm not making money. I'm not saying unlock the video for $10 or buy the playlist for $200. I'm not doing the series here on TikTok where I like gatekeep my videos and make you pay for them. There's no coaching. Everything is free. You can go on my website. My website is kennethsuna.com. It's just my first name, my last name. Click on the menu, and you can go through all my resource guides that are totally free, all my templates that are also free. None of my templates or my resource guide has to be unlocked by you giving me your email. I'm not trying to email you. I'm not trying to sell you a book or a course down the road. It's just there. It's free. Is the market closed today? Today is Sunday, so yes, but markets are also closed tomorrow for the holiday. How do you own Google? Isn't it owned by multiple people? I'm not sure I understand the question there, but Google is a publicly traded company, so you can buy shares. I think Harold left, or Harry left. I don't know what his question was, and he's gone now. But it must have been blocked. I'm getting a thing here that says comments have been flagged. Do you track pre-IPO? Not really. To be an accredited investor, you need to have hundreds and hundreds of thousands of dollars in cash to qualify to be to buy pre-IPO. Sometimes companies will do like a lottery where you can buy the shares. But for me, I'll wait for it to go public, and then I'll wait for the stock. Usually, I'll wait for it to dump after it goes public, and then I'll buy it on a pullback. Let's see what we've got here. Can you do NEP? Next Era. Oh, Next Era has been on my list for a while. They have a dividend of 12%, which is very high. However, it's high because the stock has dropped 62% in the last 12 months. The more the stock price drops, the higher the yield goes, because the dollar amount is a percentage of the dividend, or is a percentage of the stock price. So $3.47 is 12% of $28, I guess would be the math on that. It's down 29% in the last 5 years. It's down 16.5% since going public in 2014. The stock just continues to lose. They have a dividend safety grade. They don't even have a dividend safety grade for some reason. It's not there. You know, as a stock that's fallen so much, one of two things happen. Either it becomes a dividend, either people chase into it for the dividend, like we're seeing currently happen with AT&T or Verizon, or it continues to drop in value and they end up cutting their dividend. It's hard to say. You would have to run some fundamental analysis and look at their earnings and their cash on hand, which you can do using my free template, which is on my website. They have a 1-year price target of $33, which would be about a 15% upside from here. You know, if I were to invest in something like this, I would personally put in a little bit. Caroline, did your WWE shares transfer into TKO? Yes, they did. If you sell covered calls, do you still get dividends? I don't think you do. I think you lose the dividend. But let me double check. It says that you still collect your premium and the dividends. There is something where you lose your dividend, but I can't remember what it is. Maybe someone in the chat knows. I can't remember which one you lose your dividend, but I guess you keep it for covered calls. Lucid, where do you see it going? Probably nowhere. You know, it's a highly speculative stock that's down 63%. As a lottery ticket, I would only put in what I was willing to lose. I would imagine like one of two things happening. Either they go out of business and they're done, or someone buys them and merges them. They have a 1-year price target of $5, which is 70% upside, but there's 9 analysts covering the stock. 8 of them give it a hold. 1 gives it a sell. So they're also pretty quiet. Short PayPal this year. Danny Spa says, what ticker is WWE? It is now TKO. They've merged with UFC. So they're under the one company now of TKO. I forgot Monday they're closed. Yeah, tomorrow is closed. What software do you use for analysis? Go to my website. It's kennethsuna.com. Click on my free resource guide. It's totally free. There's no email sign up. There's no Venmo or PayPal. There's nothing. It's totally free. Download my free resource guide. It has all the websites I use for my analysis. I use websites like MarketWatch, Seeking Alpha, TipRanks, stuff like that. The person with the Dallas Cowboys and shrug, you don't have a username, so I can't say your username. Your thoughts on VOO 70% and the other 30% in QQQ and VGT for an IRA. I like it. It also depends on your age. If you're on the younger side of things, it could be 50-50 split between QQQ and VGT and VOO. Or you could do like a 3-way split between them. You could do 25% in each and add a real estate investment trust, like Realty Income is another option because Realty Income pays a monthly dividend. You could also add, you might not want to, it's a little bit more risk, but something like a covered call ETF for the fourth investment and split everything evenly, 25%. Or you could do 70% and then 30 like you mentioned. I think it's fine. I think tech and QQQ and VGT will outperform VOO over the long term. If you wanted to take a little bit more risk, because tech is always a little riskier, but also has much higher potential returns, you could go 60-40. It's totally up to you. If this is the number you're comfortable with, I think it's fine. Insert name here. My favorite cereal is Fruity Pebbles or Cinnamon Toast Crunch. And believe it or not, weirdly enough, I like the Raisin Bran Crunch one is also really, really good for some reason. What is your favorite cereal? Now I want cereal. You can set buy orders and limits. I think I missed something. Ford. I like Ford. I own Ford. They have a dividend safety grade of F, which is not good. I think there's something like a 64% chance based on past analytics that when a company has a dividend safety grade of F, they usually cut the dividend within a year. That would not be great news for me. But they've cut their dividend in the past and then they've reinstated it. It's currently a 5.24% dividend. They could cut it by 50%, make it a 2% dividend. I don't know what they would plan to do. Or they could eliminate it completely, which wouldn't be so unusual. I think long-term Ford will do fine. I don't think they'll ever be like a massive growth stock. You know, someone else in the comments earlier said that Ford, that automotive companies have low margins, so it's hard to become super duper profitable unless there's someone like Tesla with like massive new growth. So Ford for me would be like slow and steady, with a good dividend too. But if they cut the dividend, yikes. Palantir I own. They have a lot of government contracts, and they have they're branching out into AI, which I think will be beneficial for them. Exclamation mark says Tesla as a long-term play is crazy. I guess it depends on when you buy it. I bought Tesla when they went public. The stock is up 18,000%. No, I'm sorry. I didn't buy Tesla when they went public. I bought everything else here. I bought WWE when they went public. I bought Meta when they went public. I bought Kava when they went public. I bought Tesla 2 years. I bought Tesla in 2015, I think. Either way, in the last 10 years, the stock is up 1,800%. So that's the risk with buying speculative new companies that are unheard of and unknown, that you could have runaway gains and you could lose everything, which is why people always recommend when you're going into something new or unknown or speculative or high risk, that it becomes the smallest part of your portfolio. So someone can say, like me, I bought it in 2016, and they go, wow, you must be rich. Well, back then, I was looking at it like, what is this? I'm only going to put in a little bit. My mom is texting me. Check Duolingo or Super Microcomputer. Super Microcomputer is interesting. People ask me about it all the time. Overall on Cigna, I think it's kind of whatever. You know, the growth isn't massive. The growth is okay. Let's see. Their growth over the last 10 years was like 200 and something, right? 240%, which is good. Their profitability is good. Their 1 year price target was okay. Oh yeah, their 1 year price target was great, 21%. I did NEP already. I hope you saw it. I think I'm all caught up. Oh, Dual. Someone was asking about Duolingo. Duolingo is an odd one to me because it's just a... it's just... My mom is like texting me like crazy. I'm live on TikTok. Ugh. Duolingo, it's 194 is the 1 year price target. That would be down 8.5%. It has a hold rating, 2 buys, 0 sells, 7 analysts covering the stock. I don't know. I mean, how big can a language app become? You know, I guess I never saw the appeal of like this one, but it is up 164% in the last 12 months, which is insane. Since going public, however, it's up 55%, which is good. This article says, outstanding business with outrageous valuation, and he puts a hold on it. This guy, another analyst, says, it's time for a breather, don't pay this price of $212, which would make sense then why there's a price cut on it. Okay, let me go to the bottom here. We got 55 questions. I've never used Motley Fool. I couldn't tell you if they're credible or not because I've never used it. I prefer Seeking Alpha and Market Watch. What do you think about Amazon? I love Amazon stock. I think Amazon's going to do fine long term. Even if it pulls back here and there, I don't really care. In the last 10 years, it's up 672%. Amazon's going to get to a point, by the way, where it's going to be harder for them to have massive growth. They'll become something like a Coca-Cola or a McDonald's where they've saturated the space. They're not going to grow anymore, but they're not going to sell off. People will continue to use their products. I would imagine at that point, in whether it's a couple of years or a decade or 2 decades from now, that they'll probably start paying a dividend, would be my guess, after they've tapped out all their growth. I love Amazon, though, and I think it'll be fine. I'm curious about AMZY. Is it worth it? I can't tell you if it's worth it because that would be financial advice. It's a covered call ETF. If Amazon stock is more volatile, then you'll make more money. Amazon tends to not be that volatile that much these days, so the dividend is a little bit lower. Thoughts on Chevron? Chevron is currently $147 per share. It's down 16% in the last 12 months. In the last 5 years, it's up 31%. In the last 10 years, it is up 23%. Their dividend is 4.10%, which is great. So you're not getting massive growth from Chevron. you're getting a pretty consistent 4% dividend. They've got 36 years of dividend growth. Johnson & Johnson and Unilever are good to have as well. Yes, I see that comment. Johnson & Johnson's another really good one that's like saturated the space. They're not going to have huge growth, but they give you a good dividend. What's up? Can you do AMD, NEO, ARM? Thanks. That's a lot, man. Pick one. I gotta get to everyone's question equally. I'm not gonna spend time going over like 4 different stocks for one person. Sorry, I don't mean to be rude, but I got a lot of questions in here. I got 50 I gotta catch up on. How many ETFs to buy? I can't answer that for you. I like 4. Here's what I would do. I would have an S&P 500 index fund. I would have a dividend-based ETF. I would have a growth-based ETF like QQQM or VGT, your choice. And then I would have a real estate investment trust. I'd keep it at that 4, and I'd be happy. How many ETFs to buy? I don't understand. It's up to you. You can, like, some people want to just buy the one ETF. An S&P 500 index fund is good for a lot of inexperienced new investors who don't care. They don't want to own individual stocks. They don't want to get complicated. Just give me the index fund and I'll put a little in every year. Other people like to branch out and they say, well, I've got my safe, boring, consistent index fund and I want a tech one and I want a dividend one. They want the tech for higher growth and higher returns. They want the dividend for more income. Maybe they want a real estate trust for monthly income because realty income, the real estate investment trust I like is realty income. They pay monthly. What's wrong with Apple? Why did I say something was wrong with Apple? I love Apple. Thoughts on PayPal? Should I keep buying? I think PayPal is going to have a lot of competition. I think they'll do fine. But it could be that the competition eats into them a little bit. In the last year, it's down 20, let's see here. In the last year, it's down 23%. In the last 5 years, it's down 32%. Since going public, it's up 75%. So it depends on when you bought it. If you bought it 5 years ago, you're sitting on a 32% loss. If you bought it when they went public, you're up 75% and you love it. If you bought it last year, you're down 23%. It could be that you buy it this year and it goes up 15% next year and it was a great time to buy, but nobody knows. PayPal is currently $61 a share and they have a 1-year price target of $71, which would be a almost 17% move. PayPal is split evenly. 30 analysts covering the stock, 15 hold recommendations, 15 buy recommendations. It's totally split. You're going to have to go on my website and download my template, my fundamental analysis template, input all the data and make a decision based on not only what the analysts say, because that's a small part of the picture here, on the overall financial picture of the company and what you think could happen. Do you think competition could hurt them, or do you think that they remain like one of the leaders in the space? That's a personal choice that I can't answer. Jacob says, thoughts on VI tax and another mutual fund. Let's look. VITAX is a Vanguard Information Technology Fund. It is $246 per share. They have a low expense ratio. It's a mutual fund, which means you can only sell it when the market closes, so once a day, unlike an ETF where you can trade it like a stock all day, any day you want. Not outside of that, not that big of a difference. It holds 318 companies, 99% tech, so it's going to do well because tech does well. It's up 435%, basically similar to the VGT fund that they run. And then the other one was VGXCX, the Vanguard Healthcare Fund. It's only up 10% in the last 10 years. I would say pick a healthcare company or two that you like and own them individually. Ken Wonder says, hey Ken, good morning. What would you guess on the Fed interest rate cuts? Probably 3 to 4 cuts over the course of this year. Boeing is a good one. Should I buy a call on Tesla? I can't tell you. Duolingo, we just talked about. I hope you heard it. If you didn't, I'm going to repost this live on YouTube later today. Oh, Ashley, you lose on the dividend when you short a stock. I hope Ashley is still in here. You are correct, Ashley. I couldn't remember. Someone was saying, if you sell covered calls, do you lose the dividend or do you keep the dividend? And I couldn't remember. And I said someone in the chat will know. And Ashley Moreski has the answer. You lose the dividend when you short a stock. Tesla dip. What are your thoughts? I'm in calls. I stay away from calls because I lose money on them all the time. I can't tell you what's going to happen for sure with Tesla because nobody can. I own it. I'm going to continue to hold it. That's all I can say. They could have slower growth going forward because there's so much competition. Miley Justine says NVIDIA isn't on your list of best buy stocks. These aren't recommendations, by the way. These are just the companies that I've held the longest and have done the best for me. I own NVIDIA. I bought it about 2 years ago, so I'm very, very happy with that. User 616, do you know anything about these yield max funds, particularly TSLY? Yes, I know a lot. People ask me about these funds. I mean, in the course of this live alone, I think 15 to 30 people have asked, what do you think of TSLY? The problem with these lives, by the way, is that I start the live, someone comes in and says, what do you think of TSLY? I answer, they leave. 20 minutes later, someone else joins the live. What do you think of TSLY? They don't know we've already talked about it. I answer it again, they leave. Someone else comes in. So I've talked about TSLY a lot. You can also go watch my covered call playlist. Go watch the covered call playlist. I go over TSLY extensively in there. Marat says, if you have 30,000 euros, how would you invest it? All ETFs? It's totally up to you. You can check my playlist. I have investing by the amount. That's the name of the playlist. One is 10,000, one is 100,000, one is a million. But you can readjust the numbers to suit you. Please hold. That's the problem with going live. I talk too much and I lose my voice. I would go ETFs. And maybe a little bit on individual stocks that you really, really like and you want to own standalone. Maybe you love Apple and you want Apple shares. Apple is going to be in basically every single ETF on the market these days. So you're going to own it in the fund anyway. But if you want the higher returns that come with individual stocks, you can pick and have overlap. You can have Apple. I do. I own Apple stock and it's in my index funds. So that's an option. Or you say, screw it, I don't want to buy individual stocks, and you only buy ETFs. There's a playlist on that, though. I have a pinned video on my TikTok account that says Investing for Beginners, and it would be a great one. Okay, I'm all caught up. 47 messages to go, and I'm only live for 3 more minutes. Do you have book recommendations? Yes, they're in my link tree in my bio. And TikTok is going to say that the link is dangerous. It's not. It's just TikTok doesn't like promoting Linktree because people can put in their OnlyFans links, and they don't. I guess they don't want that. Don't worry, I don't have an OnlyFans account. But yeah, click on the link. It'll take you to an Amazon storefront where you can see all the books I recommend. Do you have any position in bonds? I'm not a fan. No, bonds are for old people. Hey, whoa, what is that? Is that like the Dogecoin or the Shiba? Who sent that? What a nice present. Shivy, thank you for the corgi. That's so cool. Thank you so much. Tavis, I own a lot of Apple shares. Time to dump Apple? I don't think so. Thanks for all you do. Miss T, hey, good morning. Can TSLY lose its dividend? They won't lose it because their dividend isn't based on like company profits. So companies like Ford could say, hey, our profits are so low, we're eliminating the dividend. TSLY's, the whole way they generate their dividend is by selling covered calls. So they'll always have a dividend, but it'll be much lower if the stock goes down, because it's just cheaper to buy the stock at that point. Why would you buy a covered call betting that the stock is going to go up and you could get it at a lower price? So they wouldn't cut their dividend or eliminate it, but it would cut. Let me rephrase that. They wouldn't eliminate the dividend because that's all they do. They sell covered calls, but the dividend could dramatically decrease. Watch one of your reels. Thank you so much. And QQQM, is there an expense ratio is lower? Yeah, it is odd that QQQ and QQQM are run by the same company. They have the same investments, and one has a lower expense ratio. I don't really get it, but it is what it is. Jerome, let's say you're investing in 5 ETFs. Can you dollar cost average on all 5? Yes, of course, you can. One option, by the way, would be to dollar cost average more into the ones that you're more bullish about at that time. It requires more work. You know, you might say, "Oh boy, I think tech stocks are going to get hit hard next year. I'm going to sit on more cash so I can deploy it later in tech and buy it at the dip." Or you might say, "Hey, this year I think dividend stocks are going to do really well, so I'm going to shift more money into dividends now." Or you could just throw the same amount across all five. Absolutely. The do your own resource guide for Nick. It's my website. It's kennethsuna.com. Go to kennethsuna.com. It's totally free. There's no email sign up. There's no PayPal. There's no Venmo. It's just there on the website. Absolutely free. How far do you see SCHD going? Just higher in the future. I don't have a number. How often do you use options? Almost never. Is it worth it to buy a crypto ETF? If you don't want to buy Bitcoin on your own, or you don't want to go through the process of opening a Coinbase account and funding the thing and running the risk of losing your password or whatever, then yeah, ETFs are a great option. None of them have really priced in their expense ratios yet because they're brand new. So I would personally sit on the sidelines a little bit. Also, you have buy the rumor, sell the news. There was a lot of hype into this. Last year, Coinbase stock was up 300%. It has since pulled back so much that now, since last year, it's only up 175%. I say only because that's quite a sell-off very recently, from 300% profit or gain of 300% to now only a gain of 175. The stock has pulled back dramatically because it's a buy the rumor, sell the news. The ETFs are out, everyone takes their profits, stocks all drop. And we saw also the Bitcoin ETFs pulled back as well in value. So for me, I would wait, and then I would see which one has the lowest expense ratio, and then I would go from there. Intel poised to do well in 2024. Let's take a look at a one-year price target, and then I gotta go because this live, I try to keep these lives under 1 hour now because I upload them to YouTube, and it just takes so much longer to do when it's a full, hour and a half video. Intel has a one-year price target of $44. That is a downside of around 5.5%. Can you tell me more about different ETF types? Yes, Marat, go click on my ETF playlist. Go to my homepage here on TikTok. Go through the playlist, like scroll sideways. Neighbor's dog is pissed. And I have a bunch of playlists on ETFs, so go through and watch all of them. XLE is fine. It's the energy one, right? So if you want exposure to energy stocks, XLE is a great way to diversify your portfolio into energy if you're bullish on energy. What's BTI? Is that the British tobacco? Yes, they're basically the same. I mean, they're tobacco companies. Ora says, "You're not rude. I completely understand. No worries. I get so many comments in here. It's really hard to keep up. Since I just said I have to end this live, there are almost 30 more new comments that I'm not going to get to because I got to wrap this live up. So when someone says to me like, hey, here are 15 different stocks, can you look at all of them? It's like, man, that's a lot of time spent on one person. But Oras, if you're new here, if you're in here a lot, I go live Tuesday, Thursday, and Sunday. You can ask a different one every time, and I'll answer it. I just don't want to spend 15 minutes on one person just because there's so many people in here. Okay. Thank you. Do you have Ethereum? Yes, I do. I have a lot of Ethereum. The expense ratio isn't taken from the dividend. It's taken from the overall assets in the fund. Prime by the dip. How do you feel about Tesla dropping? It's a potential buying opportunity. Could you quickly mention Peakbot that's in your bio? Peakbot, so Peakbot is a company that does, it's like algorithm-based trading. It's not artificial intelligence. So it's not like a robot that's buying it and selling it for you. You have to pick your own stocks, and then it runs them for you. They do the wheel method for options as well. They're a company who hired me to make a partnership video with them over a year ago. And I said, I don't know about this. And I said, look, before I ever do a partnership with a company, I have to try it. So give me a free subscription. Let me try it. Let me see what it's all about. And then I'll reach out to you. And I picked a couple stocks. It started trading. I started getting alerts on my phone. You bought this. It sold that. You took a loss on this one. You took a profit on this one. It was doing it for me. And I was like, whoa. And the gains, by the way, listen, Peakbot isn't going to make you rich fast. It's 0.5% to 1% per week on average. Every once in a while, you can have like a real surprise. Like many years ago, or about a year ago, I picked Rivian as one of the stocks. Before I owned Rivian, I put it in as one to trade. Rivian just randomly went up like 18% one day, and Peakbot sold it out, and I took an 18% profit. And I was like, and I texted Dylan, who's now a friend of mine, and I was like, but generally, no, you're not going to have 18% returns on trades. It's going to be slow and consistent. And there are links in my bio if you want to try Peakbot. The owner of the company, Dylan, has become a friend of mine. He joins me probably once a month in the lives for like 10 minutes. He'll pop in and answer questions. So I don't know who asked that. Shivy, if you're interested in learning more about Peakbot, before you go on their website and try it, let me know if you're going to be coming back into my lives. I go live Tuesdays and Thursdays and Sundays at 10 a.m. I can always text Dylan in the middle of the live and say, hey, if you have a few minutes, pop in, and he will. Hey, Amir is in here, stock market coach. Hello. What is your day job? This is my day job. Now I make content on TikTok full time. I make my money through brand deals. I only work with companies I know and use. If I don't know or don't use them, I say like what I did with Peakbot. Let me try it. I turn down probably 30 sponsorships or partnerships per week from companies that are shady or suspicious or I don't want to touch. I don't know how many content creators would do that, by the way. I think most, if a company came up that they hated and said, we want to pay you $7,000 for a 30-second video, they'd say, screw it, and they'd make the video and they'd take the money. I've turned down pretty big deals because I didn't like the company. And I didn't like what they did. And I didn't want my name associated with it. So I only do sponsorships with companies that I think will help people. And by the way, you don't have to do it. You know, if you see an advertisement from me, you can just ignore it, or you can watch it and say, cool, thanks. It keeps it so I can do this for free. Otherwise, I have to go back and get a real job or go back to trading full time, which means I'm on TikTok way less. So that's the least offensive thing I can think of doing is the brand deals, not asking you for your money. Time to add a lightning round. I love that idea. Okay, everybody, I'm going to wrap this live up here. I'm so sorry I didn't get to some of the questions in here. I think there are 25 that I missed. Andrew says GameStop is bullshit. Yes, you can PM me. My DMs are always open. Oh, I see. Hayden, I'm seeing your question. You're going to have to come back next time. I got to go. I got to wrap this live up now. I go live every Tuesday, Thursday, and Sunday at 10 a.m. You can go on my homepage here. You can go on my YouTube channel. You can go on my website. There's lots of free information there. Alex Popovic is in here. Good morning. All right, everybody. I got to go. My DMs are always open, so yes, you can DM me. Thanks for watching. Next time I'll see you will be this Tuesday at 10 a.m. Come back with your questions then. Andrew, go watch my TikTok live, which is now uploaded on my YouTube channel from a few days ago. We talk about the Bitcoin ETF a lot. All right, bye, everybody. Thanks for watching.